Good afternoon, everybody. Welcome to your Monday edition of the TraderMerlin show. And hopefully it's going to be a good week for all of you. It's going to be a short week for me. We'll do a programming update before I dive into all the details. As you guys know, Wednesday I will be taking the day off, and I'm also taking the day off on Friday. Not because I have nothing to do, it's just I have too much to do for this weekend, and I got to make sure I can. So I'll have a whiskey with you on Thursday, but Friday no show and Wednesday no show. Predominantly Wednesday, as you guys know, is my birthday. A nice milestone went out there, so I'm going to take that day off and enjoy it. So just giving you a little program update before we dive into today's stuff. As you saw, we're going to talk about natural energy today, or natural gas today, energy stocks. And then at the end of the show today, I'll dive into overall markets and go into some of the listener questions, as some of you have posted those on the YouTube channel. Of course, if there's anything there that you want to see on this program or comments, questions, put them down below the YouTube video and I'll get to all of that. All right. Yes, Big F, buy all China stocks, load the boat, mortgage your home, back the truck up, and buy anything from China. I'm totally kidding. I don't own any China stocks, although there might be a couple that I would be interested in, like Alibaba, but I will hold off on that as well. I like things that I believe the numbers more for things trading out of the U.S. And this is kind of a challenge, right? Because some of you live in Europe, some of you live in the UK, some of you live in Canada, and you have your own respective stock exchanges. And I apologize, but most of the stuff here is very US-centric, right? Most of the markets we look at going to be US-based. Certainly, you'll have to do some of your own analysis just to make sure that if you are buying energy companies in, let's say, Canada, which I may not know much about, you got to do your own research and dig a little bit deeper into what they're actually doing so that you don't get caught holding something that's a piece of garbage. So, all right, let's start off with some listener questions. This was what's going to, I guess, drive the show today. It was a question from Alan. There are actually two questions, but Alan says, thoughts on buying natural gas stocks like Antero and Chesapeake Energy. This piggybacks off of some comments I think were from Friday's show, where Skilled Stocksman posted on the YouTube page, said, look, if the trend in natural gas is down, why not just keep shorting it and go with the trend, which is what you should be doing. However, for me, when I look at commodities versus trading in individual equity, so, if I saw, Snapchat in a downtrend, I'm thinking of shorting Snapchat because the trend is your friend until the bend at the end, and it looks like it's moving down. It also has a possibility that Snapchat could go to zero, right? They might be mismanaged, bleeding money, and their stock is not worth anything, as we've seen recently. Maybe someone buys them out for a few cents, but I can't risk trying to pick the bottom and buy Snapchat. However, when I look at gold, silver, oil, natural gas, platinum, palladium, these are things that are not going to go to zero. Now, I know, before you start getting in my face telling me that in 2020 we had crude oil at negative $40 a barrel, that had nothing to do with the commodity itself, right? That wasn't that oil was all of a sudden worthless and people are like, here, take my oil. It's because the storage cost was so expensive and you couldn't find a place to keep it. So the risk of holding oil, because it's a deliverable future, was just off the charts, and that's why you saw it negative 40. You look at things like natural gas, I guess there is the potential for those futures, if natural gas is deliverable, which I'm not 100% sure, for it to go negative. However, I'm pretty sure we'll all agree that if you live on the East Coast and using natural gas for your home, you're not going to get a check from your utility company saying, hey, you used 50,000 cubic feet of natural gas last year, we're going to pay you for that. That's probably never going to happen. If it does, I would love to move to that city. So, to Skilled Stocksman's point, when I look at this chart here of natural gas, this is just a brutal slide. It's a 50% drop in price since August, which is absolutely incredible. Certainly anybody who's using natural gas is loving this. But it begs the question, how low is it going to go? And I have a red line drawn on this chart. And I don't remember exactly what these numbers were. This was from John Roll, and he was talking about production numbers. And we'll look at that here in just a second, but how they've significantly increased production year over year. We went in 2021 from I think that this is per month, 9.7 billion per month. I'm not 100% sure because I know that the overall numbers for natural gas production are in the trillions of cubic feet per year. So this is probably maybe a week. I'm not sure. Anyway, the bottom line was production was increasing and you're seeing more and more natural gas produced in the U.S. So before you start thinking that natural gas is cheap and you got to buy it, you have to look at the supply numbers and see not only how much the U.S. is making, but maybe what are we importing, what are we exporting, and that type of data I think becomes critical. Looking at this chart, let's forget for a minute that this is a chart of natural gas, right? Let's just say that this is a chart of, Apple, Microsoft, Cisco, Intel, Goldman Sachs. You pick a stock. I actually would say now's a good time to take a stab at it, right, and buy some of it. Number one reason being you're pulling back to the long-term trend line, right? You're this long-term trend line going back, well, not long-term, going back to 2020. You're right back to that trend line and bounced off it today. You're also coming back into this demand zone from 2022. So you have a couple, supply and demand and trend factors, which, as we've seen on shows for me in the past, that's paramount to my trading decision. Now, I could go look here on the longer term. Let's go monthly. And now this picture changes quite a bit. You look historically and you're going, oh, well, wait a minute. Historically, prices have been right around $3 to $4 on natural gas futures. And here we are at 517. So maybe there is more downside movement. Now, again, this all factors into the supply and demand equation, which we'll look at here in just a second. So on paper, it looks like a good buy. Sorry, on chart, it looks like a good buy at this point. And I see Rivers here says, I bought some UNG calls today at the open. How far out did you go, Rivers? Because for me, I was debating that. I'll tell you why I'm kind of holding off here for just a second. But I was actually thinking about potentially buying some calls on natural gas, specifically UNG, but doing longer term. Because I think if you can get through the winter, meaning maybe I can buy them for February, March, then I think you'll probably do a bit better on it. But I don't know. That's all just speculation at this point. So before I say is now a good time to be buying natural gas stocks, I think it's important that we look at some of the economic data. Now, I think you all know, and I'll make it very abundant by just stating it, I am not a natural gas expert. John Rowland is probably the guy I would look to at any moment to give me direction as far as the little detail from producers, from export, and he seems to know all those details. So I'll see if I can get him on in the coming weeks to maybe add further comments on what's going on with natural gas, why specifically we're seeing such a sharp slide. I mean, it's not too often you see a 50% drop in a commodity in just 2 months. That is kind of crazy. And Sheila says, is UNG in a good weekly demand zone? Well, let's just look at it real quick. I mean, it should be pretty close to what you saw with natural gas futures. And, we did breach. I would have focused on this demand zone that went really from the last couple days of June to July, right? Just basically July 5th. That bottom there would have been kind of a target. And today we've bounced back up, but we technically closed below it. So that really does take away a lot of the power of this demand zone. And I'll put a little circle on here just so you can have it as a reference. But this little circle I just drew, that is those lows. That's what I would have been targeting as the potential bounce point. So if you look at this two trading sessions ago, back to October 20th, Thursday, that would have been for me the buy point. I would have thought, okay, I'll take the stab at it. And on Friday's session, you got hurt, right? It was a pretty decent gap down. Now, what's interesting is it did fill this gap. There was an unfilled gap that goes all the way back to March 21st of 2022. We filled that gap, and all of a sudden today we get the nice big pop. So I guess it begs the question is this a good time to be buying UNG? I got to say that if I had a gun to my head and said, you have to pick a direction, I would probably go long on this one. I would probably, go long on UNG, expecting natural gas to have a bounce. You just generally don't see things fall that much before they have a nice pop back to the upside. Now, let's just quickly look at a more recent sell-off, just so we can see what that might look like. Here, natural gas sold off 44% in 15 trading sessions. That's back in June and July. Whereas this most recent one, from peak to trough, was it was 50% in 42 days. So you actually had a stronger sell-off back in June and July, but notice that rip up. I mean, that was a huge rip to the upside there in natural gas back in July and August of this year. So you are seeing some pretty dramatic swings. Let's look at production numbers, as I was just mentioning. And now this chart, I think, is really interesting. I think that the vast majority of people just don't understand how much natural gas we produce, also how much we consume. And this also shows you net imports, meaning how much are we importing of natural gas. And this is probably the most impressive thing on here. I'm kind of colorblind personally. I believe that this net imports is green. I believe red is consumption and blue is production. So let's start with production, right? That's the blue line. And if you notice, you're seeing the production number starting really in 2005 surge dramatically, right? We've probably doubled production since 2005. So in 15 years or 17 years, doubled production. Right now, you're looking at roughly 35 trillion cubic feet of production. What's noteworthy for me, though, is how high production is above consumption. Consumption looks like it's running right around 30 trillion per year, and production is about 35 trillion per year. So you've got about 5 trillion cubic feet extra of inventory. That's part of the reason why I think you're seeing this abrupt sell-off in natural gas. That's part, right? There's many different reasons, but let's look at several things. So we've got that big separation, and right now we are a completely self-sufficient. We can produce all the natural gas that everybody in the United States can consume. We can produce that internally. That's impressive. We are 100% self-sufficient with regards to natural gas. Now, if you look down here at the bottom with this green line, we were importing natural gas back in 1995, 1990, and it was actually a nice trend up. But ever since, I'm assuming fracking and different methods of extracting natural gas, you can see we've been declining. And really since about 2017, we're a net exporter. We're no longer importing. And that the faster that this slides down, that's obviously great for U.S. businesses that are exporting natural gas. But it also that you kind of want to see this drift down because that's going to take up some of this excess supply. Now, where do we see our excess supply? Let me real quickly bring up my Forex factory because, again, we're still dancing around this question of is now the time to buy natural gas stocks. But just really want to set that picture of we've had a huge correction in natural gas, which I think you would all agree at some point that's going to have a significant impact on the bottom lines of natural gas companies, right? If I'm a natural gas extractor like Antero or Cheniere or Chesapeake, these companies that are just extracting natural gas, if I was selling it for $10 and now all of a sudden I can only sell it for $5, my bottom line is going to be impacted significantly. So we're in a period right now where this week, some of the major names in natural gas are reporting. I believe that Antero and Chesapeake are reporting this week. Those are two of the names I saw, but there's several others that are reporting. So want to wait and see what happens with those specific securities because it's going to take a few months for a sharp decline in price to impact the bottom line. Now, certainly they're probably using futures contracts to hedge those markets as well. That factors into the price discovery process, but just throwing it out there. Now, let's look at what's happening this week. And I want to show you this, I think it's Thursday, is using natural gas inventories. Yeah, there you go, natural gas storage. Just so you can see the trends, right? So you look at this chart here, and you can see it's at 111. What that means is that there's been more natural, actually, for anybody who's interested, you can always click on the little file icon, and it will tell you this is the change in the number of cubic feet of natural gas held in underground storage during the past week. Now, I'm going to say with the giant Barry Bonds type asterisks on this one, we don't know exactly what's in those underground tanks. Right, you remember John Rowland was saying that they use aircraft to see how full the oil tanks are, and that oil number is always so colossally off. I wonder what the mechanism is for natural gas storage. However, what that means is more and more has been put into storage. And you're wondering, well, this looks like a lot of supply here, right? It's been surging over the past few months. I'm telling you, this happens every single year. This is a very extremely predictable pattern. During the summer months, which you can look here from April all the way through end of October, is when they're building inventories for the winter months. And you can see last year that actually you had the from April all the way to November 18th, it was above that line, and all of a sudden winter hits, and from November until March, we're just consuming that natural gas resource. Now, let me zoom out here further so you guys can see that this is not a one-off pattern. This is like clockwork. This goes all the way back to 2019. You can see winter of 2019, huge drawdowns in inventories, and then big surplus. Big drawdown in 2020. The story goes on and on and on. So what we're expecting here, if history and this type of production number is any clue of what's going to happen in the future, here is all the way back to, come on, let me show you. I can't show you more. That's weird. It only goes back to 2017 on this one. But the pattern will be, with 99.999% certainty, that we're going to see, starting in early November, probably mid-November, a sharp decline in inventories. Now, the inventory number we have right now is similar to what we saw back in 2019 and 2020 and even 2021 with regards to storage held or natural gas held in those storage tanks. So that picture remains the same. All right. So we've covered a few different things. We've covered, number one, natural gas itself has had a significant decline. We could speculate on many different reasons why. I'm sure that a lot of it has to do with global tensions and maybe appeasing of those tensions. Number two, we looked at production versus consumption numbers, which is showing that they're increasing significantly the amount of production, and that may also be part of the reason that we're seeing such a decline. If production continues to outpace consumption, then of course the price of natural gas will start to fall. Simple laws of supply and demand, basic economics. If we continue to see the imports numbers decline or exports increase, then that's also going to take its toll on the natural gas inventory. So I guess the question, which was clearly raised by Alan, which is thoughts on buying natural gas stocks like Antero and Chesapeake Energy. Well, the question is, should you buy natural gas stocks now? Well, let's look at some of the big names. There's obviously dozens and dozens of different names out there, but I'll run through just a few and we'll try to line it up with the pictures that we've just described, which is we've got a ton of inventory. We're producing like crazy. My guess is that we'll probably see more and more exports to most likely Europe, simply because what's going on with Russia and that pipeline being broken and issues going on there. You would think that our exports would increase, which means that takes away some of that production number. So let's look at some stocks here. And if you have any in particular that you want me to look at, does this price action have anything to do with? No, I don't know that, Chase. Not sure. Let me look at some of the big names. So you mentioned Antero to begin with. So that's, if my memory is correct, AR. So here's Antero Natural Resources. And I'm going to start this off on a weekly time frame so we can go actually, let's go monthly. All right, so we can look at the whole picture of Antero, and this goes all the way back into 2013, like the little dinosaur they put on TradingView, which shows you the origin of it. Now, I don't know the history before that, but you can see at one point it was up around $70, and it sold all the way down to a low of about, 50 cents. Certainly wish I would have bought Antero at about 50 cents. Let me see if this was done because of splits. I'm going to go here and show you. No, I got no splits on this chart. Wow, pretty impressive. Anybody here holding from 50 cents? I wish you can buy me lunch if you did. Anyway, what is it telling us right now? Well, it's telling us that this thing's been on an absolutely unbelievable move to the upside. The current trend right now, damn, Larry, good for you. Awesome. Hell of an investment, man. I wish I would have been introduced to it back then, but shoulda, coulda, woulda. I guess the question is now, what do we do with it? Well, let's look technically. Technically, it is forming a pennant formation. You have it making higher lows, but also lower highs, right? So that shows compression, and it doesn't mean that the trend is over. I guess the only real negative sign here that I see with Antero Resources is the highs are dropping rather quickly. The lows are maintaining, which is great. And maybe that becomes where you end up looking to be a buyer of Antero, is as it comes back down to this lower uptrending red line and staying within that formation. Now, for those that like chart patterns and technical analysis, when you look at this one, what this generally means is it's going to continue to the upside if it breaks out of this pennant formation, right? It's really just a breather after a long run. If you're just analyzing the psychology of price action, right? It's not making new highs, but it's not making new lows. It's just kind of consolidating. So statistically, the breakout should happen to the upside. That I just don't know. Is that the gift of God pattern? You like that story, huh? It's not for me. I wouldn't call that a gift of God pattern by any means. I do like it though. I definitely am a fan of pennant formation, symmetrical triangles. I think that it's all about understanding the psychology of that price pattern. So at this point, I would say no. I would not be a buyer of Antero Resources. You notice down here at the bottom, there's an E, right? So their earnings are going to be on the best day of the year, which is October 26th. Oh, wait. Yep, October 26th, they come out with earnings. Now, one thing that is noteworthy here is if you go back to last 8 earnings seasons, let's go all the way back here into 2021. They've missed 1, 2, 3, 4, 5 times on earnings. They've beat twice, and then they're coming out this week. So, I'm not I'm not a huge fan of that. They've beat earnings and kept on soaring. And I don't know what's going to happen with their earnings. I have no idea. My guess would be that the natural gas move that we've seen here since September is going to certainly have an impact, but it's not going to be fully baked into their numbers, right? And I don't know their mode of operation. I don't exactly know all that Antero does with their natural resources. Maybe it's not just natural gas, maybe it's others. But I would wait. If you're thinking about looking at AR, I would not personally jump in it before you looked at earnings. Let earnings filter through and see what they say. If anything, maybe you sell some put options. If you are someone who's interested in buying, you sell some put options way out of the money. And if you notice here, we're currently right around 33.08, 33.9. You could go down to this downward trend line, which would be about 10% away from current price, and sell some puts. You could probably sell puts expiring on Friday and get some pretty decent change for that. So that's your first one. And I think, what was your second one? Let me real quickly look at your question here. I think you said Chesapeake. Yes, thought about buying natural stocks like Antero and Chesapeake. Okay, so let's go look at CHK. Unfortunately, you don't get the full picture of CHK. They restructured or filed bankruptcy. I believe they did bankruptcy, which erased all of the history before 2022 or 2021, which kind of sucks because there's some really good stuff in there on the 2021 chart. Chesapeake looking amazing. It's gone from lows of right around $40, hitting highs of over 100, and like $105. So looking great right now on this daily time frame. I would say consolidation, right? If you really wanted to, we could have fun and bring on the yellow box here, and you're looking at a really wide range between call it $91 and 105, and we're dead center of that right now. So I would do the similar thing. I would not touch it simply because earnings is happening November 2nd. So you've got not this current week, but next week they'll be reporting earnings, and we'll get a clearer picture of how this current slide in natural gas is impacting Chesapeake. Could you trade it? Absolutely. I would do a similar thing where I'd be potentially selling puts at the dead low, which was not the dead low, at the low of the yellow box, which is right around $90, $90.50. Sell some puts there. And if you wanted to collect that premium, it's just I wouldn't play with the fire of earnings announcements. I think it's just way too risky. Joseph Merlin, are you planning on buying NQ puts the next day weekly supply zone? Actually, Joe, right now, believe it or not, I'm long QQQ. I got exercise and I've been selling calls against it, so I'm actually doing better by holding long and selling calls against it, as long as we don't get a colossal drop, which I don't think we're going to get one. I do have a stop loss in place, so if I hit that stop loss, I'll dump my Qs and close out my call position, which would not be good. I don't want to, but I have a feeling we're probably going to see a little less volatility starting in 2 weeks, right? Obviously, this week's going to be major because you have Microsoft, you've got Apple, you've got Amazon, I think you got Google as well. So, I mean, it's just the mother load of earnings happening this week, which is going to impact significantly the tech sector. So the prudent thing that I should be doing is I should close out my QQQ position, close that call position as well, just to be safe, but I'm taking a risk there. So if we do get a nice rally up, I will liquidate anyway and look to short an overhead supply level, which we'll look at here in just a second. So those were the two that Alan had mentioned, Antero and Chesapeake. There's also another one, EQT is obviously one of the majors. There's EQT, which has the same picture, right? It feels like it has more room to the downside here. But all in all, these energy stocks have been performing really well. LNG is one that John Rowland was really big on. And that thing hasn't stopped. I mean, it's just kept going and going and going and going. So this one looks the best out of all of them. But I'll be honest, I really would like, if I'm looking to buy natural gas stocks, which is kind of the clickbait for today's show, I would want to buy on a pullback. And LNG, Cheniere, is not pulled back at all. You look back to its 2020 lows where it's down around $27. It really has had maybe one significant pullback, and that was between March and July of this year. Other than that, it has been almost nothing but up. So this is the big dilemma we all have as traders. If I feel like natural gas is going to bounce from here and surge to the upside, then maybe I want to jump and buy some LNG. However, I have a personal, what do you call it? Restriction. It's like my body won't let me do it. I can't buy something that's at all-time highs. I just can't bring myself to do it. Others here might be comfortable in saying, well, if I buy now, it's going to go higher. Well, okay, that might be your mindset. But I tell you, I've missed hundreds of trades in my trading career because I just didn't buy when the chart looked like this, right? Sitting at historic high levels. I just feel like it's going to have a pullback, and quite often it does not have a pullback. It just keeps on going, and I usually miss those trades, and that's a flaw of my style. However, I'm also not taking on that risk of buying the dead high, which is just something I tell myself I will not do. But body bag was cool. So let's see, what else do I have? That was Cheniere is one of the big ones. I mean, there's so many different energy companies out there, and they're all slightly different in how they do. EOG is another good one. Here's EOG Resources. It also has had just tons of whipsaw, but it's right near historic highs. You have Devon Energy, DBN, right? That's also sitting right near historic highs. This one actually looks really strong, but I just can't bring myself to buy at the high price. UNG calls were a good call. Yeah, I think so too. I do think UNG, although I don't know if I would have done it for the end of the week. I might have given myself a little more wiggle room, but I do think you're going to see a natural gas bounce here. If you look at UNG, now granted, this is a security that trades during regular market hours, not the futures product, but it's based off of futures products. You do have some unfilled gaps here, and there's going to be a lot of them, but could it jump up to $22? Sure. Absolutely could. I don't think it'll happen by Friday, but do we see natural gas jumping to 22 by the end of I guess the end of the month? End of the month is Friday. By the first couple weeks of November, yeah, I think that's a very real possibility, which is probably why I would look to be buying calls, somewhere around that 20, maybe $21, $22 mark, because I'll be paying less for those. But if we do get a pop, the reward will be greater for me. So there you go. Hopefully that answered some questions. What's missing for me in this analysis is two things. Number one is I'm not a fundamentals person. So when you look at Antero or EOG or Cheniere or Chesapeake, it would be nice to line those companies up in a table, which there's plenty of resources for that. It's just not my area of strength. And look at them and say, okay, which one has the best financial position, right? Because some are going to be struggling, some are not. Which has the lowest PE ratio, which will give me a clue as maybe if something's undervalued, and I can analyze, do I want to buy those specific energy stocks or natural gas stocks based off the fundamentals? Now, if I can couple the fundamentals in with some of the technicals and macros that we just looked at, I think as a long-term investor, you put yourself in a much, much better position going forward. It's just not my area of strong suit is fundamentals. I'm not a big fan, even though I studied them in college. I mean, I looked at fundamentals when I was in college. That was what we based our trades off of. But as you guys have figured out, I'm an impatient person. I don't have time to sit there and go, ooh, this is a value play because it's trading at a book value of 2. And it historically trades a book value of 15. And I got to wait for it to go from 2 to 15. It could be in that thing for years. I just don't usually have that kind of patience. For me to be making, selling call options and waiting 30 days, that's even waiting too long. But, we'll have to make concessions somewhere. All right. I think that will do it for that segment. Let me go to what happened out there today. If you have any other questions, let me know. Bottom line, should you buy energy stock? Should you buy natural gas stocks now? Personally, I would say no. I don't think you buy now. I think you're going to get a pullback in them. You have earnings happening on a lot of them in the next couple weeks. So I would wait for earnings to plan out and maybe in 30 days revisit it, or after earnings revisit if there's a major knee-jerk reaction. What could you do? Well, if you're looking at owning, let's just say you're looking at owning Chesapeake, right? And I'm just using this as an example. You could sell those sell those puts at this level down here, right around, call it $90, right? And on earnings, you're going to get big swings. We've seen it happen over and over and over again, is these massive, 20% moves right after earnings announcement. So you're going to get a lot more premium. You just got to be sure that you want to own it at these levels. Now, 6% isn't too far away, but maybe if the premium's right, you sell it down here at, let's call it $87 and get yourself a 10% discount. So if you do get filled and you were thinking about buying natural gas or Chesapeake, okay, would you be happy buying it 10% lower? Most of us would probably shake our head and go, yeah, I'm okay with that. Yep, I'm nodding. Yeah, I'll take it 10% lower. Or maybe even closing this gap that goes all the way back into July, that's 14% lower. So I think that while it looks exciting and energy right now, UN natural gas futures have been just getting crushed, it doesn't mean that it's done. And remember, the energy producers operate on a different model, right? Natural gas is pure supply and demand driven, whereas you look at these companies I'm looking at here, Antero and Cheniere and Chesapeake, some of the big names out there, they're driven off of their business operations. It's how much natural gas they're getting out of the ground, how much it's costing them, how much they're selling it for. So those variables are very different than just looking at the natural gas futures chart, which is this one here, and saying, hey, it's trading at a big discount, back down to a trend line, right near a demand zone, looks good as a long, right? Yeah, a lot of these ones do, Robert. A lot of natural gas ones do, or a lot of energy companies do pay dividends, which I don't know the exact percentage. If you want to find out, you can go to, I've got it all set up and everything, Devon Energy, and usually you can see here the yield. They pay a $6.2 dividend and an 8.35% yield. That's great. If you're looking at long term, awesome. And that's per year, not per month, guys. So anyway, I hope that helped a little bit, Alan. I know it wasn't definitive saying yes, buy, or no, don't buy. It's a matter of personal preference, right? And if I'm looking at it from my perspective, I would say I would hold off. All those energy stocks we looked at, almost every single one of them is sitting at fairly historic highs. Yet natural gas, which is their asset that they sell, is plummeting in price. And I think that that's probably going to impact them. Not to say that Devon Energy and Cheniere and Antero aren't great buys or great companies. It just maybe they could be a better buy at 10, 15, 20% lower. So that's what I would be looking for. There you go. Larry says after the election. Yeah, I guess you could wait till after the midterms. I don't think that would be as impactful as the earnings. I think the earnings will paint a clear picture as how this most recent sell-off is hitting their bottom line. All right, what are the let's look at the at least what I have for you for today with regards to macroeconomics for the 24th. You can see here was flash services and manufacturing numbers coming out for pretty much every part of the world. You had it for the UK, the US, and everybody is hurting. This is an ugly picture here. If you notice the French, right? So the French, their manufacturing and services number, both of those declined. German flash manufacturing and services number, both of those declined, and they were worse than expectations. Same thing for the entire EU. Significant drawdown in their manufacturing and services numbers, which means they're expecting contractions in services and manufacturing pretty much all through Europe. You look over here to the UK, they also missed. We saw their inflation at highs they haven't seen in decades. Much higher than expected, or sorry, not much higher, but higher than expected last week. And then finally here for the US, our services numbers, that's a pretty sharp decline, way worse than expectations. They were expecting an increase in services. We came out at a decline, and same thing for our manufacturing. So this is kind of a gloomy number. It's not saying at that one point data is the end, but it's saying the trend has been that we're below 50. Remember, 50 is no real growth, no real optimism for manufacturing or services. Anything below 50 means contraction and pessimism. Anything above 50 means optimism, and here we go. Historically, you'd love to see some of those numbers much, much higher. Let me see if I can bring up the data just so you can see a historical chart of the U.S. And we'll go to numbers for today, and I'll show you the U.S. manufacturing. Let's do services since we're more of a service-oriented country. We'll go down here to the services numbers. I'll click on that chart. And you can see that historically, make it a little bit bigger for you. This goes all the way back into 2014. And historically, we stay above zero, right? We really only had a couple minor little blips down below that 50 line. Obviously, the recession killed services manufacturing, but we surged back. And now all of a sudden, we've had our fourth consecutive monthly reading on services down below 50. That's really not that good of a piece of data. And then finally, here is the manufacturing numbers. We just went below. And the last time we were below was obviously during the pandemic. And the trend is very clear. So this doesn't bode well for those that are looking for a big market pop. Hey, good to see you, Big Eb. Thanks for joining us. Go enjoy some sunshine, my friend. Yes, I'll see you mañana. So that was your economic news. What was the comment here from Chris? Stupid question. There are no stupid questions, Chris. There aren't. Global PMI plus U.S. bad news, less than 50. ES cranks up to 3820. Yeah, I know. There's a disconnect, man. Let's go look at those overall markets, since that's what I need to get into next. So here's your S&P. right now is an interesting point for the S&P. Again, I still feel like we're going to drift towards that 3,900, just go to this other supply zone that goes back to September. But it's just slowly drifting up there. We're right now at this most recent supply zone that we hit back on October 5th. So if you're going to see a sell-off, tomorrow is probably going to be the day where you get it right into that supply zone. And it's right at the top of it. To Chris's point, this is why trading fries most people's brains, especially the engineers, is, if you have 1 + 1, that number is always 2. It cannot be another number. It has to be 2 because that's the foundation for everything in mathematics and engineering, right? 1 + 1 is always going to be 2. However, when you look at trading, 1 + 1 could equals -50. It doesn't make any sense sometimes. You just shake your head and go, well, how can I have so much bad news and the market surges? It's because people feel like the government and the Fed's going to step in and bail the market out. So you get the surge. Or you get amazing news where highest levels of GDP and earnings growth is super strong and all of a sudden markets tank because there's fear that they may step in and slow things down. So that quote-unquote laissez-faire, invisible hand of government is not so invisible. It's definitely an overt manipulator of price. I just saw a comment here. Where was the one that said manipulation? I could have sworn I just saw somebody said that the markets are manipulated. Where did that go? Oh, man. I guess it might have been retracted. Would something like UNG require looking at fundamentals because it follows the futures? I would not necessarily look at UNG per se. I'd be looking at the metrics of these energy companies, right? Are they investing in new technology that's going to allow them to extract gas more quickly? What does that cost, right? And then, of course, when you're looking at not necessarily fundamentals of natural gas, but the macroeconomics of natural gas, right? What's going on with Russia? How does Russia impact Europe? What's the natural gas sales to Germany? What do those contracts look like? How is that going to impact the bottom line? That type of stuff, sure. You could have one announcement from Russia saying all energy to Europe is cut off, no natural gas whatsoever. What's going to happen to the price of natural gas? It's going to skyrocket, right? Or natural gas, they could say, hey, we're going to open up all pipelines because Russia may be hurting for cash. We'll open up all pipelines to Europe and everything's going to be great again. And all of a sudden, natural gas plummets in price. So there's certainly the macroeconomic perspective. And that's just the Russia-Ukrainian situation I'm looking at. Could be many other things. My accountant always asks, why do you want 1 to 1? Yeah, exactly. What do you want 1 to 1 be? 1 + 1 to be? That's called creative accounting, right? And a good accountant can make any number what you want because it's using the tax code. However, if I'm building a house, 1 + 1 better equals 2. Although, is anybody here in construction? Anybody here a contractor or a builder? There's some things that I just don't get. And it's one of the stupidest things ever. If you said, oh man, somebody hit me upside the head with a 2x4. No, nobody hits you with a 2x4. They don't make 2x4s. It's what is it? 1.5 by 3.5. It's short. There's no they don't make 2x4s anymore. You can't buy a 2x4 or a 4x4. They do not make 2x4s. the measurement on them is off, so it totally screws you up. You're like, if you stack two of them, I think it's 1 3/4 inch thick, right? So instead of being 2 inches thick, it's 1 3/4. Instead of being 4 inches wide, it's 3.5. It's like, well, hold on a second. That's shrinkflation for you. At some point, somebody made that trade. Am I right, Chris? I think, every time I get a 2x4, it just cracks me up because I'm like, wait a minute, this is supposed to be 2 inches and it's 1 3/4. Now all of a sudden my measurements are all messed up. There you go. Yeah, it's so crazy how weird that is. But anyway, why don't we just call it a 2.5 by 3.5 board? At least I know what I'm getting. Putin will make Europe great again. That's good. Yeah, Larry, politics plays a huge role. And, you can ask John Rowland when he's on, to what extent is he looking at those political things? And, certainly elections are going to play a role in it and what goes on with Russia, et cetera. But there's a lot of, I would say, especially with commodities, seeing how the web, not internet, but actually the web of connections between Russia and Germany and the United States and Japan and how all these energies are moving around, massive. So any minor change in policy or some psychopath comes in and it all gets disrupted and has crazy, crazy, crazy moves. Okay, so 2x4 is 1.5 by 3.5. I thought for some reason like 1 3/4, but all right. So that was your economic calendar for today. How much time do I have left? I don't have enough time to get to this one. I will get to it tomorrow. Alex, you asked a really interesting question. Maybe I'll make this the topic for tomorrow. Alex asked, any tips on how to be a day trader? I don't want to hold anything overnight anymore. I love it. It is, I guess, gut-wrenching sometimes taking home overnight positions. So maybe I'll do a little show on, or tomorrow's show kind of focusing on the day trader side of things, just what you should know, maybe where you need to focus your attention on, and how you can be better at that. So I'll get to that one tomorrow, just because I got a time crunch here with too many other things to do. Tomorrow is an exciting day. I'm going to bring up some popcorn here, and so there you go with our popcorn trade of the day. You've got popcorn trades of the day. And for those that don't know, popcorn trade of the day is fairly simple. What it means is a company's reporting earnings after market hours, and you should put it on a 1-minute time frame, just like this. Here, let's go. I didn't really keep track of who reported earnings. There wasn't anything big today. But let's just say Microsoft. For MSFT, bring up the Microsoft chart, change it to a 1-minute time frame, and then look at extended hours. And as soon as it starts to turn powder blue here, that means that is the after-hours session. And you'll get to watch extreme moves here in a very short period of time. Like, let's go look at what happened with Tesla last week when they reported earnings. Right, there's their earnings announcement right there. That, to me, is an absolute popcorn trade of the day. Huge swing up and then a colossal move down. I mean, that was just a gigantic move for Tesla. That's why I call it the popcorn trade of the day, because you should sit back with a bowl of Orville Redenbacher popcorn. Don't trade these things. Leave them alone. Just be entertained by how quickly it's moved. We all focus on the day's trading that looks like this. This is one full day's worth of trading. Actually, a little bit more. There's one full day's worth of trading. And then all of a sudden, it turns to nothing when you look at the scale next to the earnings announcement. So anyway, that's our popcorn trade of the day. There's going to be 2 of them happening tomorrow. Here we go. Microsoft will be one of those, one of the most valuable companies in the world. And the next one, Google or Alphabet was reporting earnings. But look at some of these other names, guys. I will be watching Google and Microsoft. I think the most entertaining one will be Google. I think the second one, most from an entertainment factor or volatility perspective, will be Microsoft. And the main reason for that is, Google, it's only a $100 stock right now. That's because of splits. Microsoft is going to be a little bit pricier than that. It's $250? Yeah, $250 I think is what it's at. So that'll give you a lot of volatility in those two. But we also have Coca-Cola, General Motors, Visa, Twitter, General Electric, and dozens of other heavy hitters reporting earnings tomorrow. So this could really set the tone for Thursdays, which is even bigger. Remember, Microsoft and Apple are the 2 heaviest components in a lot of these indexes. Apple reports on Thursday along with Amazon. So this week is, the rub your hands together and just get excited about what's going to happen. Big moves up, big moves down. I don't know which way it's going to go, but it'll definitely give us some clarity and set the tone for the rest of the earnings season. Now, that's your earnings calendar. Here's your economic stuff for tomorrow. We have some interesting data coming out. I am a watchdog right now for housing data. You have HPI numbers coming out, and they're expecting housing prices to continue to drop there. You also have the S&P Case-Shiller Composite 20 Home Price Index numbers coming out, and you notice they're expecting prices to drop. We were up at about 20%. Then we dropped down to 16. Now expectations are we're going to see 14% year-over-year growth. That's not really good, because remember, a lot of people's quote-unquote net worth or leverage that they're using to borrow money at is out of their homes, and if housing prices are dropping, all that obviously is going to start to impact people's ability maybe even to make payments on their mortgages or just to spend. You also have consumer confidence numbers, Richmond Manufacturing Index, which is not as big of a deal as the Empire or the Philly, but it's expected to contract as well. You also have CPI numbers coming out for Australia, so it is going to be a very exciting day in the markets. Bring your helmets for sure, and it's going to be extremely high volume on those ones. Let's see. How about Bezos' tweets? Yeah. I think Bezos said, batting down the hat. Did he? I didn't catch that one, but wouldn't surprise me. I mean, Amazon, let's be honest, for those of you who may not know, I am a huge Halloween fan, and I'm going to be hosting some friends over the weekend for a little party. And I just went and looked. I need a drop cloth for a photo booth I'm making. And I looked at Amazon. I looked at Home Depot. $35 for the drop cloth. I can have it delivered to my door for $21 from Amazon. It's like, man, I really just like to go to the stores and walk through them, but I'm going to pay $14 less. Like, it's a huge, huge discount for me to just order it and have it delivered tomorrow. God, I'm a huge fan of Amazon. If Twitter drops, Would you buy it? It's basically pegged to 54. No, I wouldn't buy it. And remember, it's pegged at 54 because that's the commitment that Elon Musk made. So let's go. We talked about it before where we're saying, oops, that's not the right chart. There we go. Let's go more recent data. You know, we talked to it when he made the initial intent to buy it, you know, it dropped significantly. And once he, actually, let me take that back. It popped instantly, but then fell apart. And when it got down here, when the deal was supposed to follow through, that was the time to do it. Now, the deal is most likely going to go through. I would not buy Twitter at these levels. And it says if it drops, nah, I would leave Twitter alone. I think the option that you had to buy it at a much more discounted price is gone. I think that's gone. Now, what will happen is if the deal does go through, it will probably start to sell off rather quickly. Remember, he's paying a premium for it, and the market has been declining. So if you look at where we are at now, he made that offer to buy on the, let me get it right here, April 1st. Nice April Fool's joke, but that's the offer day. Actually, it was April 4th, excuse me. So if I look at that compared to the S&P, look where we were on April 4th. The markets are tanking. The only reason that Twitter is staying up at $54 or in the $50 range is because Elon Musk is paying $54 for it. After that happens, it's tanking. And I actually think it might make more sense to be buying puts on Tesla for the next 3 months. Why? Because if it's going to catch up to where the market is, and I believe that it will, you're going to see Twitter tank. So I would definitely be much more inclined to be buying puts than trying to pick a bottom on this one. But great question, Chase. I like that one. Going to be Magnum PI this year. Nice. That's a good, easy, comfortable costume, right? You got the big old mustache, a Hawaii shirt, a Detroit hat. You can probably get a Detroit Tigers hat really cheap, too. Puts on Tesla and Twitter. I would say Twitter more so, right? Because Tesla has been real volatile and is certainly impacted by the Elon Musk saga, but Twitter is impacted directly by the purchase price of Elon Musk. Look at if you have to put a line in the sand and say, here's a 50-50 chance that Twitter goes up or Twitter goes down, run through every possible option that you can think of for Twitter to go up. Only thing it would be that all of a sudden Elon Musk steps in there, fires everybody, which helps the bottom line from an earnings perspective, and then creates the most epic social media platform ever. If you look at everything that caused Twitter to go down, well, the markets have been declining probably 20 to 30% overall as a broad market, and Twitter is holding at 54 because of Elon Musk. Historically, when somebody gets acquired, you get the big pop on the news up, and then once it happens, it sells off. You've got a lot of historical precedent that says Twitter's going down. Ad revenue's declining. People are going to be less, using social media platforms like Twitter less, moving to other ones. So now I'd definitely be looking to buy puts on Twitter. Not so sure about Tesla. Tesla is still cranking out a good product. I sold puts today for the end of the week. I sold the 180s. No, I sold the 190s. Closing Friday and got like 2.9% rate of return for this week. So I actually sold puts, so feel free to buy those puts from me. I like those. Tesla put leaps have always looked good to me eventually. Yes, I think you're right, Tom. If you go leaps, sure, but you got to be thinking down the road. I sold them this week just because it was a nice rate of return. I think it was 2.8, 2.9, somewhere in there, percent rate of return for just 5 days. Cool. And if I do get exercise at 190, then I'll have to dump that thing real quick. All right, I'm going to wrap this up. I don't have any guest this week. As I mentioned at the top of the show, I will not be doing a show Wednesday or Friday. I will do one Thursday just because I can't be away too long. But I am working on getting different guests on the program. Scott McCormick will be on next week on Tuesday, and I have about 3 others I'm trying to get on the program, and a couple new ones that that have never been on this program. And if you have recommendations or suggestions, people, you can always put them down below the YouTube video. Say, hey, get this person on, and I will look through all those comments and questions, and I will get to tomorrow's question, which was from Alex on doing things from a short-term perspective and day trading. What's the ins and outs of it? That, my friends, is your show for today. Hope you enjoyed it. If you liked it, give me a thumbs up and comment on the YouTube video. I will see everybody tomorrow. Take care.